The AI trade will continue to unwind, and what'll happen is multiple compression. The earnings are still going to grow. The orders are still there. I mean, Oracle still has a massive back order, but back orders are only good if you can get the earnings and the dollars in the door. And that's what I would be worried about for them. I want to focus on the AI adopters. So why are banks making new highs? The opposite of CapEx is expense reduction. I want to be long the companies that are reducing expenses that are now going to benefit from AI.
Why the skepticism? Visser points to a concrete example, CoreWeave's recent earnings narrative. The company reported insatiable demand, exactly the sort of line that tech bulls latch onto, but they also announced a pullback in capital expenditures. Why? Not because demand disappeared, but because the physical build-out is constrained. Power availability, energy infrastructure, and even the construction resources needed to scale data centers.
CoreWeave came out with their earnings report, and they said they had insatiable demand. And that is the part that Dan Ives cares about. So for everyone listening, when you're hearing tech, at some point, tech needs the infrastructure to be built out, or it can't grow any faster. And what CoreWeave said was, we're cutting our CapEx because we can't get the power shells from the data center. And what I basically said was, at some point, CapEx and capital needs concrete. And there's no concrete. And it's metaphorical, but the reality is, this is where we've talked about energy, power. At some point, the gas turbine situation matters. So everyone who's been long GE Vernova, are they going to be fine 5 years from now? Probably. But what people have to realize with the demand side that is going exponential, at some point, the commodity stuff is a necessity to make sure that the compute can actually happen. We have plenty of semiconductors. So that was a trade that I was more interested in. And I still think the semiconductors will be fine for next year, although I'd be more looking for the names that are smaller. What Dan is depending on is that the build out continues. Because if the build out doesn't continue, and what CoreWeave said starts to, like, God forbid, we hear the same thing from NVIDIA and Oracle, the AI trade will continue to unwind. And what'll happen is multiple compression. The earnings are still going to grow. The orders are still there. I mean, Oracle still has a massive back order, but back orders are only good if you can get the earnings and the dollars in the door. And that's what I would be worried about for them. I want to focus on the AI adopters. So why are banks making new highs? The opposite of CapEx is expense reduction. I want to be long the companies that are reducing expenses that are now going to benefit from AI. And I want to be involved in the biggest AI theme, which I'm going to do this weekend on my video for about half it. I would say this weekend is the one weekend that for traders, if they haven't ever gone to YouTube and watched it, I will cover with charts a lot of the momentum stuff, a lot of the growth stuff, but I will also cover what I believe is going to be the biggest theme for next year, which is pharmaceuticals with AI.
Interesting. Explain a little bit more just so people understand. It's like drug discovery, it's drug development. It is something to do once the drug is already out there. How do you see that?
So drugs are, they arguably are the most important thing and the most disruptive thing when you actually get solutions. So I want people to go back to COVID because when Moderna, and if people haven't heard this, Moderna came out with the vaccine blueprint 2 days after they got the blueprint or the sequence from China. Once they had the virus details, the vaccine was created 2 days later, the blueprint. That was before a single person in the United States was declared dead. So this was before it was even a market event. That's how quickly, and it was all related to artificial intelligence. The stock that day was $20. A year and a half later, it was $500. And everyone remembers Moderna couldn't be stopped. And that was because they took what they had done and said, oh, mRNA technology is going to change the world and we're going to cure everything. That is an S-curve adoption scenario. Like, it will be involved in curing everything eventually, but at the time, it was too fast. So the stock has basically cratered back down. What happened in the last few weeks is Eli Lilly, which had been under pressure for a period of time, mainly because the uncertainty over what they were going to do with drug prices. Drug prices are really critical for a lot of people in the country, and especially voters. And inflation. So we want drug prices to go down. So Eli Lilly announced, number one, they're building a massive AI drug factory, and they announced it with NVIDIA. Number two, for people who don't know, they've had a partnership now for almost 2 years, if not 2 years, with Google DeepMind, their lab, which is Isomorphic Labs, and in silico, this company. Now, Isomorphic Labs is an AI-generated group from DeepMind where they're trying to solve everything. So they are the group that had AlphaFold 3. AlphaFold 3, which came out 2 years ago, led to Demis Hassabis. Actually, AlphaFold 3 came out last year. It led to Demis Hassabis from Google DeepMind, the head, one of the leaders of Google, getting the Nobel Prize. And he said in January of this year, and he said it on a 60 Minutes, which everyone should go watch, by the end of this year, we will have AI drugs going into clinical trials. Now, what this will do is people will start to realize how much is spent on R&D, both time and massive amounts of money, where 90% of every drug never even make it to trial. So the failure rate is very high. So the amount of money wasted on things, what they're doing is saying, no, this is the blueprint, like Moderna, that's going to get you this. What in silico does is they're the engineer that goes through and starts creating what would actually work. And then Eli Lilly is the manufacturer. So this is kind of like this process of going from idea to solve a problem. Oh, okay, let's test it out and see if it get it to clinical trial. So I don't want to make this too long, but this is part of the story. Google DeepMind hired a chief medical officer who's an expert in getting things through clinical trials back in June, Ben Wolf. They have talked openly about being close. And there's a bunch of interviews that people at Isomorphic have talked about. Now, they can't say exactly what's going on, but this is related to cancer. That's where their focus has been. Their focus has been on cancer. Eli Lilly announced an upgrade in the in silico relationship this week. All of this stuff has happened in the last 3 weeks. Mm-hmm. And so when a stock goes higher as much as it has, and to give you guys an idea, this month when there's panic everywhere, the S&P 1500 Pharma Index is having its second best month since 1999. So for those of you looking for longs right now, I would go spend some time on biotech. The great thing about pharma and biotech, they're like tech. Like if you get a story that you're curing cancer, you start going through it. But the main point is Merck is an 11 PE stock. The Mag 7 are not cheap. Mm-hmm. They're spending money. Merck is maybe getting to the point where their expenses will go. So what you've been seeing the last couple of years is a lot of companies that are all of a sudden benefiting. Their multiples are going higher in places like Salesforce.com. Their multiples are coming down. Chipotle, their multiples are coming down. I can make the argument that all of the multiple compression names, it's been related to AI disruption. Now you're starting to get the multiple names on the bottom that are starting to do well on this. So I think between commodities, energy, and pharma and financials for next year, those are the places that may not be sexy for retail traders, but I learned with GameStop, they'll trade anything that can make them money, and they should be. Those are the places where I think the river is going to start flowing well, and I just don't agree with Dan Ives. I don't think the tech sector is going to be as easy as it's.
Meanwhile, the opposite side of CapEx is expense reduction. Banks are hitting new highs right now, in part because they're benefiting from cost cuts and efficiency gains, many of which are powered by AI deployments. Visser says he wants to be long companies that are actively reducing expenses through AI. These are firms that convert AI from a headline into a productivity lever, the companies that squeeze costs, lift margins, and deliver cash flow.
When they happen, it spreads like wildfire through an industry. And I actually wonder how many people are Bitcoin minded versus people who start to recognize these patterns of, okay, I know a lot of people who are saying, look, I Bitcoin, I didn't sell my Bitcoin. I still got my Bitcoin. Net new dollars, though, they went to AI. Net new dollars next are going to go to humanoid robots. Net new dollars from that are going to go to, pharmaceutical development. Like they're actually innovation investors, not just Bitcoin investors. And I think that ability maybe is actually going to become a very core skill that's important kind of for the world that we're going into. You agree with that?
Yeah, I agree. And this is actually an important point for people to connect one dot with. So when we've talked about Tesla, when we talk about, now pharmaceuticals curing cancer,
Never thought we'd talk about pharmaceuticals on here, but I'm here for it.
I never did either, but look at the chart of Eli Lilly and just be like, well, that thing moved fast, and that's a big. I mean, they're $1 trillion now. Again,
I think Ken Langone, if I understand, if I remember correctly, his average holding period is 42 years in his portfolio, like just GOAT, right? And if I remember correctly, he has held Eli Lilly for something like 40 something years and still holds the position today.
Yeah, it's. That's an amazing story. The chart is an amazing chart. The story is an amazing story. You're talking about once you get to curing cancer, okay? And when I say curing it, it doesn't get rid of it. It becomes something you just have, but it doesn't kill you. Mm-hmm. And if you go start, and this is what I want everyone to do, just watch the 60-minute, and I say the 60-minute YouTube because Demis Hassabis for it's probably a 12-minute clip. He talks about this year beginning to cure all diseases, and it'll take, and he said by 2035 we'll have cured all diseases. Oh, well, that means we won't see it there. I'm like, that's not the way markets work. Moderna is the example of a company that solved a problem that was really critical at the time, and everyone dove into it and it raced. If you get someone that's cancer affects everyone, like everyone, there is not a single person that hasn't had a family member that's gone through, or a friend who's gone through cancer. So anything related to cancer is a massive change. Now, anyone who's been following the news realizes that all of this stuff has really accelerated since Gen AI. That is the gateway to all of this stuff. So for the last 3 years, the trade was the infrastructure trade, and it was the Mag 7. I'm just saying that is not the trade. So do I still think Tesla's going to have a great year next year? Yes, because I think humanoids will be brought forward. Most institutional investors will not buy, oh, great, we're going to cure drugs. How do I invest in that? But when you see their earnings revisions going higher, and this is the thing people have to realize I wrote in CoreWeave. CoreWeave had to lower stuff. Quant strategies look for estimate revisions moving higher. If the cutting expense side and the efficiency thing ends up being the big thing, if small caps do well because of the rate cuts and the fact that people have to remember the one big beautiful bill, the majority of the fiscal impact is going to happen in the first half of the year because we got the midterms. So they wanted that to happen. We also have rate cuts going on around the globe, and on a 2-year lag, we started to cut rates. You're going to start seeing the impact of lower rates that's going to filter in because monetary policy runs with a lag. This is the first half of next year. You've got commodity prices that are ticking higher. Why? The CapEx. The CapEx is still going to happen. It's just going to be slower than what people thought. So these companies will have to push their earnings out. And that's why when you get into this is less about, oh, we're having to push our earnings out. And oh my gosh, those numbers are huge. We have to go buy these. It's a very different market when you get into that side of where people are valuing something there. So your comparison between humanoids, between pharmaceuticals, all of this stuff to me is going to line up next.
An important behavioral point: retail flows chase performance. Visser points to the way capital shifts from hot narratives to the next big thing: Bitcoin to AI to humanoid robotics to pharma. And he calls this the work of innovation investors versus one-trick speculators. Understanding how net new dollars flow is a key skill in the market, he describes.